Hey everyone, Nvidia is about to drop their Q2 numbers today. And honestly, I've been crunching the data all week, trying to figure out, is this $43.3 billion revenue expectations genius or complete madness? Here's what I found. So check this out. Data center revenue is expected to jump from $18.4 billion to $28.7 billion. And that's a $10.3 billion increase in one quarter. Meanwhile, gaming is barely moving. Warren Buffett always says, focus on the main thing. And for Nvidia, the main thing is definitely AI infrastructure right now. Now, here where it gets interesting. And a bit scary, gross margins are expected to drop from 78.9% down to 70.6%. That's Blackwell ramping up. And like any new product launch, yields start low. I learned this the hard way analyzing Intel years ago. New architectures always pressure margins early on. Wait, hold up. If margins are dropping, why is everyone so bullish? Let me show you what the smart money sees. Institutional investors added $2.4 billion in Nvidia positions last quarter. BlackRock, Vanguard, State Street. They're all buying more. 5 of the top 6 holders increase their stakes. These folks don't buy margin dips. Unless they see something we don't. Follow the smart money, but understand why they're moving first. Here's the competitive landscape. Nvidia is pulling in $22.6 billion in AI revenue. AMD, just $2.3 billion. That's literally 10x their closest competitor. The moat is real, but for how long? Let's take a look at the valuation. Nvidia is trading at 74x P ratio and 21x price to sales. These numbers would make Ben Graham roll over in his grave. It's expensive by any traditional metric, but hey, traditional metric didn't see the AI revolution coming either. Is this data getting heavy? If this deep dive is helping you prep for the earnings, please smash that like button. Tells me you want more analytical breakdowns like this. Now, this option chart tells a story. Check out the call volume around $135. That's right where the Nvidia is trading right now. Over 22,000 call contracts at that strike. The market basically betting the stock stays here or goes higher. Smart money, FOMO, probably a bit of both. But here's the thing. Everyone's hyper-focused on revenue growth. But the real risk is hiding in the plain sight. Let's talk risk, because they're real. Blackwell yield issues could crush margins even more. China export restrictions could slash 15 to 20% of their revenue overnight. And customer concentration is scary. If Meta or Google pull back, that's a problem. Any one of these could derail the whole earnings story. This analyst revision chart, actually encouraging. See how estimates plateaued the past 2 weeks? That usually means the bar is achievable. When estimates keep climbing up to the earnings, that's when you get nasty surprises. Here's something that surprised me. Nvidia's past earnings show. A big beat doesn't always mean a stock pop. Q3 2024, they beat revenue by 8.9%, but the stock dropped 2.5% the next day. It's all about guidance quality, not just headline numbers. So if you're playing earnings, here are 3 risk-defined approaches. Bull case, buy $130 calls, sell $150 calls, capital stake. Base case, sell $125 puts, buy the dip. Bear case, buy $130 puts, hedge with $120 protection. High implied volatility means selling premium might make sense. Interpreting all of this, I'm cautiously optimistic. Revenue beat? Likely. But margin pressure? Very real. Target? $150, about 11% upside. This isn't 2021 FOMO anymore. It is institutional capital, creating new price floors. Play the thesis. Respect. Subscribe for a post-earnings breakdown. Next week, I'm diving into what Nvidia results mean for the entire AI sector. Like, subscribe, and drop your predictions in the comments.